All right, let's get started with the monthly market report. Excited to have you on this month for the September 2021 monthly market report. Over the next 20 or so minutes, Kate and I are going to break down some of the biggest topics in real estate today to give you those topics in the perspective so that you're the most knowledgeable expert on these in your market. So I'm going to go ahead and share my screen and we'll get kicked right off. Probably the biggest All right, let's get started with the monthly market report. Excited to have you on this month for the September 2021 monthly market report. Over the next 20 or so minutes, Kate and I are going to break down some of the biggest topics in real estate today to give you those topics in the perspective so that you're the most knowledgeable expert on these in your market. So I'm going to go ahead and share my screen and we'll get kicked right off. Probably the biggest news coming out is the drop in pending home sales. Maybe you've seen that over the last couple of weeks, been all over the news, and certainly clients are seeing that. So let's talk a little bit about that and this topic of, is the market starting to cool off? We've seen the headlines out there. We talked about it last month that it's being talked a lot about, but let's look at pending home sales going all the way back to 2012. And you see right there, you see we're kind of clipping along there at a nice pace. We dipped down during the lockdown, come back up and pack a bunch of activity, a bunch of home sales into summer of last year. And then the drop is that little red bar that I just put in there on the screen. You see that drop, still well ahead of where we have been historically, but off the highs of what we saw over the summer last year and coming into the spring of this year. So we look at pending home sales. I want to give you that context about where we stand. If we were to draw a line, what a healthy market looks like, this dotted line right here gives you a perspective of a healthy market. Still a very, very good market, but starts to put that drop in pending home sales into perspective. And probably one of the biggest stories out there. And, if clients see, hey, home sales are dropping off and, I'm concerned, then that just adds more fuel to that fire of, should I buy right now? And we want to be the educator in this market. I'll go to a quote here from Odetta Cushy. She says, "We are seeing some signs of softening in the housing market, but context is important here. We're still very much in a seller's market. We're seeing some early signs of softening." So what we want to do here is focus on what I have in blue there and underlined. Context is very, very important. Just like we looked at existing home sales, we want to look at everything. We looked at the last 10 years of pending home sales, and then we see this drop. It puts that in context. So let's go through and look at a couple other things, and let's focus on the context of what's happening. First, showing time. We've looked at this for a while, and you're familiar with that if you've been following the monthly market report. We kind of dipped down. You see the two red bars there during the lockdown last year in March and April, and then came back, packed a lot of business in the summer, then saw a tremendous amount of business as we started, or a tremendous amount of showings as we started off this year, but we've started to dip down. Now, this most recent reading of July is 189.4. You go back to last summer, we were hovering around 200, 199, so very close to where we were last summer when we packed a ton of business into those few months. Again, context is important. If we go back to 2019, that's what we want to look at for true context. It's hard to look back at 2020 and say, this is a number that we can look at because it was such an erratic year. But this reading back in July 2019 was 123. Right now, we sit at 189, well ahead of where we were back in 2019. Again, context, very, very important. If we stay on this theme about, is the housing market cooling off? Ojo Labs released this. They said the U.S. housing market continues to be ultra competitive, even as new COVID cases surge. But new data shows the level of competition and ensuing price increases may be cooling off just slightly. Data shows that 49.6% of homes sold for more than the initial list price in July, far ahead of the number reported in July 2020, when 26.8% of homes were sold above initial asking price, but below June's total, when 54.4% of homes were sold more than the initially listed. So this is a quote that I had to read several times before I understood it. Our research team went back and graphically laid this out. I hope it'll help you like it helped me. This is what they're saying. Go back to July 2020, 26.8% of the homes sold over list price. June 50.4, July 49.6. So there's your cooling off market there, or what they were saying, maybe cooling slightly. Only 1 out of 2 of the homes sold over list price. Still a very, very robust market. Go back to what Odetta Cushy said. We're seeing some of these slight signs of cooling, but 1 out of 2 homes selling over list price certainly is probably not what I would consider a cooling market. Now, if we want to talk about why we're in the market we're in, we have some graphs that I want to share with you that'll help sort of lay this out. And I want to start here with new monthly listing counts. And we'll look back, going all the way back to 2017. And we have in here 2020 as well. So if you look at 2017, 2018, 2019, kind of follow this curve sometime around May, start to peak in the new listings coming to market, and then start to go down and further dip in October, November, and December. That's what an average year looks like with listings. We start out here, kind of bell curve shape, peaking around May, and then tailing off. Well, you see there on the orange bar what happened in 2020. We started off on that normal pace, and then we dropped down. During the lockdown, people pulled listings from the market. Once the lockdown was lifted, started to bring those listings back in. But here's the key that I want you to look at. You can just see it visually. It may be something good to share with a client you're talking with. When listings started coming back to market last year, we never hit the historical number that we'd seen in 17, 18, and 19. We were shy of that. And you can just see it there where we kind of hover there below and then tail off at the end of the year. Folks started putting their homes on the market towards the end of the year, but we never saw the volume or count coming to market like we had seen in the past. And there are a lot of reasons for that. There are folks that said, you know what, I feel concerned. Life is uncertain. I'm uncertain about health outlook. I don't want to bring a bunch of people into my home. A lot of very valid concerns. We just didn't see the listings coming to market. So that's been the cause of a lot of the issues we've seen in real estate. Now let's look at what's happened this year, because it gets interesting here. We lay in 2021, and you see there that green bar, we're starting to come up, but again, very shy of where we've been historically in listings, and then kind of continuing to rise through that May time period when we would start to fall off, and then come through June and July, we're kind of flat right here. Now, what's the moral of the story here? Well, if those listings start to fall, then we're going to see more pressure, upward pressure on prices. If those listings start to climb and get in line with what we've seen in previous years, then we should see less, kind of just robust price appreciation. So we're going to continue to watch that. I'll bring that in future, monthly market reports and the things that we bring to you on a regular basis. But that's what we want to watch. We want to watch listings and are they coming back to market? When we talk about a cooling market, we don't have a buyer issue in today's market. We have a seller issue. And if we think about the seller issue, is sellers bring more inventory back to market. Here's what Danielle Hale from Realtor.com said: if these changing inventory dynamics continue, we could see a wave of real estate activity heading into the latter part of the year. So if sellers continue to bring back listings, we could see a wave of real estate activity heading into the fall. So all of that's going to be dependent upon those that put their homes on the market, and that will largely be dictated by the path of the coronavirus. So what's happening there? So a lot to watch right there, but gives you a breakdown of what we're seeing relative to the overall real estate market, what's happening with buyers, and certainly what sellers are doing right now. I'm going to pause for a minute. I'm going to turn it over to Kate to talk about affordability. One of the big topics in today's market, those saying homes just aren't as affordable as what they've been. So Kate, I'll turn it over to you.
Thank you so much, David. As you mentioned, we're going to talk about affordability next. And this is a real concern as people are watching home prices rise today and they're saying homes just aren't as affordable anymore. And what I want to do now is give you context and clarity to be able to ease those fears and have that conversation with your clients. Now, it's no surprise that people have these concerns as they're looking at data like this. This is the monthly mortgage payment, and it shows how it's increasing significantly over the past few months. This goes all the way back to April 2020, where we can see those orange bars kind of humming along. And then all of a sudden, March, April, May, June, that monthly mortgage payment is starting to rise. And that is a direct reflection of home price appreciation. Now, when we look at this contextually, we can see that that rising mortgage payment is contributing to affordability, and affordability is decreasing. And as you know, the higher the bar, the more affordable homes are. If you've been following along with us, you know that concept. And in January, it was much more affordable to buy a home than it is in the last few months. We can see that affordability decreasing. So saying that homes aren't as affordable as they were a few months ago, that's not up for debate. That is real. That is what the data is saying. And it's starting to spark this fear for consumers who may be sitting on the sidelines watching this. Now, I want to pull this graph up, and this is one we share with you a lot. It's the Housing Affordability Index from 1990 all the way to today. Now, what we can see here is that the blue bar over on the right shows that homes simply aren't as affordable as they were even over the past few years. And a lot of times what people think of when they say homes just aren't as affordable anymore is they think of that housing bubble bursting. Those are the orange bars. Are homes as affordable as they were back then when distressed properties dominated the market? No, they're not. But as we look at this chart, we can see that homes are much more affordable today than they were at any point leading up to the housing crisis. Now, this takes into consideration, as you know, wages, prices, mortgage rate. So all of those factors combined, we can see that homes are still affordable today, but you're not going to get the deal that your neighbors and your friends maybe got a few months ago. So that's the price appreciation starting to play into affordability. Now, where this becomes a real concern is when we talk about renters who are sitting on the sidelines. So you've seen this graph before as well. This is median asking rent going all the way back to 1988. And it is continuing to climb year after year, and it is truly skyrocketing over the past few years. So as renters are sitting here saying, I'm seeing home price appreciation start to really climb, I can't afford to buy a home, I'm not ready to jump into home ownership, what we need to do is help them understand the context as well of rent prices rising even more rapidly, and the fact that they're not building equity and they're building their landlord's equity. So what we want to do is really provide that understanding for renters who may be waiting because they're seeing home prices rise. But renting is creating this real long-term financial challenge for those who are waiting and continuing to rent. Now, we know everyone is ready to buy a home at a different time. So we have to take individual situations into consideration. But as we do that, we can provide context and clarity in the conversation. Now, here's another reason why renters may be sitting on the sideline and waiting, and that's because the percentage of income needed for a mortgage payment is also increasing. Again, reflection on price appreciation. We can see in this red section that that percentage of monthly income that it takes to purchase a home is now climbing even at a faster rate. It's really kind of jumping up. But let's also remember that if it's at 17.1% of monthly income right now, the historical norm is 21.2%. So again, context really helps shape this picture for anyone who might be waiting to buy a home. Now, let's hear what the experts have to say. So this is from Freddie Mac, and it's from their Essential Guide to Creating a Home Buying Budget. And it says most lenders agree that you should spend no more than 28% of your gross monthly income on a mortgage payment. This includes principal, interest, tax, and insurance. So what are they saying? They're saying 28% of your monthly income can go to a home buying budget and you're still in an affordable range. What is NAR saying? The 25% mortgage payment to income share takes into consideration that a homeowner has other expenses, such as property insurance, taxes, utility, and maintenance, so that total housing expenses are no more than 30% of income. Housing costs are not burdensome if they account for no more than 30% of income. So NAR is saying if you keep your monthly mortgage payment to 25%, we know that there's also additional costs, property insurance, taxes, utilities, and those can also vary by market. So NAR is saying keep the threshold at 25% for principal and interest, and then you will have an affordable opportunity to purchase a home. Now, let's put that into context because that's what we love to do. When you look at this graph, you can see mortgage payment as a percentage of income. So that green bar, that's what we've established. The data is saying where we are today. 17.1% of income, monthly income, is going towards a mortgage payment for those buying today. Historical average, we're below that. That's the orange bar, 21.2%. And today we are also far below NAR's guidance of saying that 25% of the mortgage payment can go, 25% of income can go to a mortgage payment. So when we put all of that context together and we see in the green bar where we are today at 17.1%, it feels like it's climbing, and it is. That number is going up, and it's not as affordable as it was to buy a home just a few months ago. It's not as affordable to buy a home as it was during the housing crisis. But when we look at the context going all the way back and we put that into perspective, what we know today is that homes are less affordable. That's not up for debate, but they're not unaffordable. Homes are less affordable, not unaffordable. And that's the message we need to share loud and clear for our clients, especially those who are renting, to understand that if you can find a home today, purchasing a home is going to create much more long-term wealth benefits, especially when we factor in equity and rising rental prices and really building that long-term wealth. So I'm going to kick it back over to you, David, to continue on.
All right. Thank you, Kate. Let's talk a little bit more just about this market, because I think one of the things, we look at what I talked about before, what Kate just talked about, one of the concerns that people have is, are we heading into a more normal market? We saw folks saying on the front end some expert quotes, the market is starting to cool. And maybe we're not in this, this hyper competitive market, still a very, very competitive market. Maybe that's cooling off. But if we think about normal, the Merriam-Webster dictionary says normal is conforming to a type, standard, or regular pattern characterized by that which is considered unusual, typical, or routine. So I want to break down a few things in the market today relative to that. First topic that I want to talk about is mortgage rates. If we think about mortgage rates, that's what's fueled the demand over the past year. No doubt the meaning of home has changed, but we saw earlier we didn't get the listing inventory in that we needed. And then, oh, by the way, rates fell. If you start to look at rates by decade, 70s, 80s, 90s, 2000s, 2010, seeing what we would maybe call more normal rates. Certainly an interest rate in the sixes, maybe in the fours. Fours are even low by a historical standard. But you go back to the 70s or 80s, 8% was not considered a very high rate. You go back to some of the highs back in some of the inflationary times, plus 10%, 15%, whatever the case may be. Look at today. We sit at 2.87% on the average 30-year fixed. So a lot of the instability maybe in the world, some of the issues with the job market right now are giving us lower rates for longer in the mortgage rate area. So still very, very good rates. We certainly wouldn't say that's a normal market by historical standards. Next thing I want to look at is home price appreciation. That's going to be something we want to look at and say, okay, are we heading into a more normal market with home price appreciation? If you look at home price appreciation by the year, most recently right here, according to this Black Knight study, 14% home price appreciation. And you're seeing higher numbers come out of Case-Shiller and some other places, 17%. We've talked about those, but a lot of appreciation in homes. And you see the red bars there in the middle. Those are the years of the housing crisis where we saw depreciation in the market. But what we know right now is the average appreciation. You see it, the orange bar there in the middle, 4.1%. Now, it's interesting. The average appreciation forever we talked about was about 3.8%. The last couple of years of strong appreciation plus 10% appreciation have raised that to 4.1%. We wouldn't say that the appreciation that we're sitting in right now is anything but normal right now. We're seeing very, very heavy, robust appreciation across the country. Months of inventory of supply have been the biggest issue in housing, no doubt, over the last year. Let's look at where we're at in that. NAR says this: month supply refers to the number of months it would take for the current inventory of homes on the market to sell given the current sales pace. Historically, 6 months of supply is associated with moderate price appreciation, and a lower level of month supply tends to push up prices more rapidly. So, month supply gives us, there are this many homes on the market, 10 homes on the market. We sell one home a month. We have 10 months supply. We've been nowhere near that for quite some time. And we see this balanced market typically being between 4 and 6 months. Where do we sit today? 2.6 months of supply on the market. This looks back all the way back to 2011, 10 years. And you can just see this ride down to where we sit in the lack of available inventory across the country in inventory. That's anything but normal. We need more homes on the market, like I talked about before. And this fall market will be dependent upon how many folks put their homes on the market coming up. Number 4, if we look at these issues, days it takes to sell a home. What typically it's taken to sell a home as compared to today in today's market. As of July, 17 days to sell a home. You go back and you look at this graph going back to March of 2019. You see some of the days there, 42, 49, some of the peaks. Think about that, a month and a half to sell a home. That's not an unrealistic time frame. But 17 days, that's a quick time frame to sell a home. And likely that number is shortened. That's by the time everything's, I's are dotted and T's are crossed, so to speak, in contracts. But, homes are selling very, very quickly. Anything but normal with respect to where we stand with days on market. Average number of listings and offers. So the number of offers that are made on average on a listing all across the country, we go out and look at that number. Typically we've seen that range around a couple of offers on the average listing. According to NAR, we're at 4.5 right now. Off the peak was about 5 in the spring market this year, but certainly not a normal market relative to the number of offers that are being received on listings. We want to keep that in mind because people say, okay, well, the market may be cooling off. Is this something we're heading into, something that's more normal? No, when we look at what's happening in real estate today, it's anything but normal. As we wrap up today, I want to give you a little bit of a look ahead at some early, things that we're seeing so that you have that looking ahead here. Home price forecast going into 2022. We're starting to get the first look at that. The average of these forecasters, 5.5% from MBA, Fannie, Freddie, and NAR. I give this to you because many may be saying, hey, homes are the price is rising too fast for me right now. I'm going to wait till next year when things cool off just a bit. Well, if you're going to wait till next year, it's just going to cost more, and you want to keep that in mind. George Ratu from Realtor.com says this: I expect an unusually busy fall season. Sellers are putting homes on the market. Normally, this activity happens in the early spring. We saw this quote earlier in the monthly market report I talked about. many experts say, hey, we could see a very, very good fall season this year because folks are putting their homes in the market. We're seeing that across the country. No better time right now to use the fall 2021 buyer and seller guides to start those conversations, to build rapport before you even sit down and meet with somebody who's thinking about buying. You can get these out electronically. You can put these in the mail. You can get them out a number of different ways, but those are out, and you'll want to take advantage of those buyer and seller guides. They've been redesigned with all the information that your buyers and sellers need to be educated on this market. So I'll wrap up on that. Thank you, as always, for tuning in to the monthly market report. We're grateful for your support. Our goal is to always bring you the biggest topics in real estate so you're the most educated advisor out there. So enjoy this day. We'll see you back next month. Take care.